Silver just crossed $114 per ounce, and if you're watching this right now, you need to understand something critical. On January 15th, President Trump signed an executive order titled Adjusting Imports of Processed Critical Minerals and Their Derivative Products into the United States, and what happened next sent shockwaves through the entire precious metals market. This isn't just another policy move. This is a 72-hour window that could completely reshape your stack, your wealth, and your future. Welcome to the Silent Ledger, where we reveal what the financial world doesn't want you to see. Before we dive deeper, if you're serious about protecting your money in these uncertain times, hit that like button right now and subscribe. The algorithms try to hide financial truth from everyday Americans, but your engagement keeps this channel alive. Let's get into what's really happening behind the scenes. Silver prices are up more than 25% year to date, with prices climbing from just over $30 per ounce a year ago to over $113 today. But here's what nobody's telling you. Trump said the administration would pursue bilateral agreements with key trading partners to secure adequate supplies of critical minerals and consider a price floor on imports, with officials expected to report back within 180 days. Think about what that actually means. The United States government just officially recognized that critical minerals, including silver, pose a national security threat when we're dependent on foreign sources. This isn't about trade deals or tariffs anymore. This is about survival. Let me walk you through exactly what happened. The United States is fully import-dependent for 12 critical minerals and reliant on imports for more than half of its consumption of an additional 29. Silver is one of those metals. U.S. tariff uncertainty had already pulled significant volumes of physical silver from London to the U.S., triggering a historic squeeze that led to a sharp decline in available silver stocks in London, the primary trading hub. What does that tell you? The smart money was already moving. Institutional players saw this coming weeks ago, and they've been quietly repositioning their silver holdings while retail investors were distracted by headlines. Now here's where it gets interesting for your stack. Silver fell more than 7% on Thursday, retreating from an all-time high above $93 per ounce, as broad tariff threats receded. But did prices collapse? No. Prices have since recovered much of the earlier decline, signaling that traders are repricing the market's structural drivers. Translation? The dip was temporary profit-taking, not a reversal of the long-term trend. The fundamentals haven't changed. If anything, they've gotten stronger. Let's talk about what's driving this rally beyond just government policy. Silver continues to face a structural supply deficit, with mine supply growth remaining constrained, as most silver production is a byproduct of other metals, while industrial demand linked to solar, electrification, and electronics remains strong, keeping the physical market tight. Every electric vehicle, every solar panel, every smartphone requires silver. You can't manufacture modern technology without it. And unlike paper assets that central banks can print into oblivion, you can't just create more silver out of thin air. Here's what the Silent Ledger wants you to understand about this 72-hour window. We're not talking about days on a calendar. We're talking about a decision window. In negotiating, the Secretary and the Trade Representative should consider price floors for trade in critical minerals and other trade-restricting measures. A price floor means the government could artificially set a minimum price for imported silver. If that happens, domestic silver prices will need to adjust accordingly. Do you want to buy silver before or after that price floor gets implemented? Let me show you the math that should terrify anyone who's not paying attention. Silver has outpaced gold sharply, with prices up nearly 150% over the past year, which has pushed the gold-silver ratio to just above 50, the lowest level since 2011. When silver moves, it moves violently. The recent recovery underscores silver's well-known volatility, which is typically higher than gold due to its smaller market size and dual role as both industrial and investment metal. That volatility cuts both ways. Yes, silver can drop fast during corrections, but it also means explosive upside when the momentum shifts in your favor. If you've been on the fence about adding to your stack, comment below right now and let me know what's holding you back. Are you waiting for a better entry point? Are you concerned about storage? Are you worried about liquidity? Drop your questions in the comments, and let's have a real conversation about what makes sense for your situation. This community is built on people helping people navigate the financial chaos that's coming. The executive order Trump signed isn't just about silver. It's about reshaping the entire critical minerals supply chain. Although China produces only about 10% of global lithium, cobalt, and copper, it controls an estimated 40 to 90% of the world's processing capacity for these materials. We mine the raw materials, but China processes them and turns them into usable products. That's the choke point. That's the vulnerability. And that's exactly why this executive order exists. Think about the timeline here. The proclamation directs negotiators to report back on the status of the negotiations within 180 days, by July 13, 2026. If President Trump determines that the agreements are not progressing in a timely manner or are insufficient to address the national security threat, he may implement additional measures, including import restrictions. So we have 6 months before the government decides whether to impose restrictions on critical mineral imports. What do you think happens to silver prices if import restrictions get announced? Do you think prices go down, or do you think they explode higher as domestic supply becomes even more constrained? This isn't fear-mongering. This is pattern recognition. Every time governments get involved in commodity markets with strategic stockpiling or import restrictions, prices move dramatically. We saw it with oil. We saw it with rare earth elements. And now we're watching it happen in real time with silver. Here's your action plan. First, understand that the silent ledger isn't here to tell you to buy or sell anything. We're here to give you information that the mainstream financial media ignores. Second, if you're already stacking silver, this executive order validates your strategy. The United States government just confirmed that physical metals matter for national security. Third, if you're not stacking yet, do your own research. Talk to reputable dealers. Understand premiums, storage options, and liquidity before you make any moves. But here's what you can't afford to do. You can't afford to ignore what's happening. Policy uncertainties in Washington, including Trump's tariff threats against other nations and attacks on the Federal Reserve's independence, further underpinned the rally in precious metals. The 72-hour window isn't about panic buying. It's about informed decision-making before the next wave of policy changes hits. Make sure you're sharing this video with anyone you know who's concerned about inflation, dollar debasement, or protecting their purchasing power. Hit that share button and drop this link in your family group chats. The mainstream media won't cover this angle because it doesn't serve their sponsors. This is the silent ledger, and we're here to show you what they're hiding. Subscribe if you haven't already, turn on notifications, and I'll see you in the next video where we break down exactly what happens when those 180 days are up and the government makes its final decision on critical mineral import restrictions. Stay sharp, stay informed, and protect your stack.